Welcome back, passive income investors. Today we're breaking down Imperial brands by popular demand. Well, by one of your subscriber requests. And I'm really looking forward to this one because this is a tobacco company I don't look at too often, but it's going to be an interesting one. So let's jump right into this. Alright, welcome back, ladies and gentlemen. Today I want to take a quick peek at Imperial brands. I haven't had a whole lot of time to look at this, and I've got about 20 minutes. I can sit here with you right now and analyze this company. We're looking at a conglomerate tobacco company, one of the largest ones based in Europe here, with a revenue of $30 billion as of, what is this, 2018, and again, GBP, or I think British pounds. And we're just going to analyze over some of this real quick because this company is paying out a whopping 8.7% dividend yield right now, give or take, and we're looking at a PE of 13.2. Now, before I get into the website, the fundamentals, all that stuff, I just want to compare this to some of the other tobacco companies. Now, this is a British company, trades on the New York Stock Exchange as well in the U.S. here. And British American Tobacco is another one of the larger British tobacco companies, and but compared to Imperial brands, it's actually quite a bit smaller, with a 24.5 billion revenue in GBP. But the PE on this one is much lower. The dividend yield is not as close right now, but it was when it was on this major dip. And when we look at even the American brands, so like Philip Morris, this is probably, I think, the largest tobacco company with about $80 billion in revenue as of 2017, and this one hasn't been doing too well. And then we also have Altria Group, which is considered one of the best performing stocks of all time by dividend increases. And you can notice these American companies, the PEs are a little higher than the British companies. But I'm showing you this because I want to show you the difference between a large company and a small company. Now, usually people find solace in larger cap companies because, especially in tobacco companies, because they feel like there's some more stability, more reinsurance in their product because the company's just larger. But the problem with these larger companies is the scale, I always find, is a little bit slower. They, for some reason, don't have the same footprint as these smaller companies like Altria Group does. Again, Altria Group has outperformed Philip Morris by a long shot. Also, here we can see the chart of Imperial brands, and here's the chart of British American Tobacco. It seems like there's been more stability over time and actually a better dividend increase. I'm going to get into the dividends in a second because the problem with these British companies is if I go into their, where's the dividends here? I found this page that shows their dividends in US dollars, which was kind of annoying to find because these companies pay out dividends a little differently than American companies do, so it's a little bit harder to understand. But when we look at the charting on this and the dividend yield history, we have had actually a decent increase in dividends. But again, when we look at how their dividends are paid out, they're quite a little bit different. But we do notice over time that we have had an increase in dividend payouts. So we have what looks like a very large cap tobacco dividend paying stock. So let's just take a quick peek at, before I start breaking down the whole website, I just want to take a total quick peek at this lady right here, because this was the first video that I watched about basically Imperial brands, and it gives me a certain vibe around the company. So I just want to show this to you real quick before I start giving you more of my opinions and we go into the website and the financials.
As we're going to be launching this a little bit later than others to really solve for a lot of the consumer frustrations with the existing products on the market. So we're very excited about it. But our main focus is in the vapor space. So actually yesterday was all about my blue and the opportunity we see in vaping. We have optionality in heated tobacco, but it's not our prime focus.
And we'll come back to the vaping in just a moment. But on the heated tobacco, I mean, will you go into Japan? That's one of the big questions people want to know.
That's going to be our first launch, is going to be in Japan, because I think consumers there, smokers, are very familiar with the product already. We've done a lot of test work with them, and we see a real opportunity for us there. We're already in Japan, not only with tobacco, but actually with my blue with no nicotine, because actually the Japanese smokers like a very light smoking experience. It's going fantastically. We've already had 6% of smokers in Fukuoka try the product and enjoy it. So we're very excited about our Japan opportunities, but more in vaping, to be honest, also in heated tobacco.
Okay, Matt.
Yeah.
Is a light smoking experience possible with vaping? I mean, it seems to me a lot of the people vaping are drawing so much attention to themselves with the massive clouds of vape that they exhale with their devices.
At this point, the questions just get a little bit silly, in my opinion. You can watch this. I'll leave the link in the description below. It's just the Imperial brand's main focus to be vaping. Now, this is really funny that they want... The reason they asked about attacking the Japan market is because British American Tobacco, I do believe, don't quote me on this, I would have to reanalyze it, owns a huge footprint in Japan already with basically their vaping products, because BTI has been well into the vapor space for a while. MO now owns Kronos Group marijuana company, or a good amount of it, and they also own Juul, which is the largest, I think, vape product on the planet right now. I own Philip Morris, and then I had to I actually sold it off to buy MO and BTI instead, just because, again, I just can't figure out what it is with these big cap companies, but they're showing their tobacco sales are really slowing, and they're very, very slow to the upcoming game of smokeless and heated tobacco products, along with even getting into the marijuana industry. Moving on here, let's take a quick peek. If you want to read a little article I was just reading, it's called "I Hate to Say I Told You So, Why I Expect the FTSE 100 Dividend Stock to Keep Sinking," which basically is a tobacco titan, well, it's a titan ETF sort of a thing. And this guy just goes on about why he sold out of this company. And I think it's funny that he talks specifically about Imperial Brands, even though he owned an ETF that had to do with tobacco. I don't like owning the ETFs with tobacco because I just don't like all of them. There's just a few that I really enjoy, and you can read this out. I'm not going to read it to you because this guy just has a basic thesis that he thinks tobacco is slowing down, they're slow to the vapor market, blah blah blah. Same thing I've just been kind of breaking down. So let's quickly take a peek into their website here, guys. Now, I thought it was funny as well in this video. We didn't show the whole thing. The guy starts talking about cancer and how these products, FDA, say they don't cause cancer and that they should be using that to promote, and she's like, yeah, we'll totally be using that. I found it interesting as well. But just take a quick peek at their website here, guys. I want to take a quick look at their media, because you can see that they're just starting to push the next generation, which is this, our views, media contact. There's nothing interesting here. There's really nothing that crazy interesting. Remember when I was doing British American Tobacco breakdown, if you watched it, they were actually getting their vape product put on a Formula One race car in a major race in Italy or something like that. And there's a lot of controversy over it. And I like the fact that they were causing that controversy because it put a lot of attention on their products and their company. Whereas, again, this very large Imperial brand company, it looks clean, but it looks old. There's nothing intriguing about it. Like, there's nothing that draws the attention. It's just a bunch of people smiling and, oh, look at our next generation products, which is where your eye gets drawn to. But maybe we'll take a quick peek at sustainability. What is the sustainability? I haven't been to this page. I guess this is just going to show what they're trying to do in the future. Maybe let's take a quick look at their performance page and see what they have to offer in here. Performance, we measure our performance against our material, environment, and social issues, and are in the process of developing a long-term yeah, so it's the same kind of BS they're just pushing on this page as well, like just what you would expect to see. So let's just take a quick look at some of where the operations are, so which the key locations we sit in right now, which is interesting because a lot of the tobacco products don't have the footprint that this company does. This company's footprint extends quite drastically. As we can see, we have Australia, Benelux, I don't know what that is. I actually don't know what that is or where that is, to be honest. We have France, Russia, Poland, Germany, Spain, Ukraine, and UK. So this company really operates over in that part of the world, whereas a lot of these other tobacco companies operate in America, Japan already, and some of the other places that this company's not into yet. But honestly, I don't know what smoking's like around the world, but I can only presume it's somewhat similar, as the books are even very similar on this company to most of the tobacco companies, which we're going to get into in a sec here. But let's just take a quick peek at one of their annual report, not an annual report, but like a forward presentation on the company real quick. As I open this up, let me scroll back to the top. We'll start from the beginning because I was scrolling through this already and I don't want to miss out on anything I haven't shown you guys yet. We're not going to go through all of this because it's a massive breakdown, but let's just scroll through real quick and take a look at the quick at a glance overview. So growth, brand, volumes, they're saying their volume is actually up, and when you're looking at this stuff, you kind of want to definitely check into the books and see if the products are slowing, but they're finding a way to increase their bottom lines. I haven't over analyzed too much of this company's books, so we'll just scroll through. I don't know if there's anything interesting to find. There's so many pages here. There's that lady again, this lady in that interview as well. She seemed a little jittery, to be honest. I don't know what her deal was, but she seemed like she was trying to be over on her game. whereas everyone else was a little more relaxed than she was. She was a little tense, in my opinion. But here we go again with really pushing this. We don't see a whole lot of products they're offering. This company, the more and more I get into it, they're trying to do the pods thing like Jewel is doing. Information, group constant currency analysis. So we got U.S. market, and this is probably just analyzing the currency. Divisions and everything else in between. To make this a little bit easier, we're just going to hop over into my trading platform because, trying to find a balance sheet in here might get a little ridiculous. And you can take your time with this. Again, go on their website. I'll leave all the links in the description below if you are more interested in doing a deeper dive. But when I go into the basic balance sheet on my trading platform, just to help out, again, I don't know the inaccuracies between these two, but I'm going to presume because of the size of the company that this is somewhat fairly accurate in the USDs. And we're looking at a total asset value of $41.4 billion and a total current liability here, total liabilities of $32 billion. And when we compare this, so we got about a $10 billion in asset or in net assets. So if we sold everything off, we'd be left with about $10 billion, which if we look into the Google fundamentals here of their market cap. So they're currently worth by their assets just over, not double, but about 2.5 times more than their overall market cap. So you could double their you could double their net assets, and that would be the price of the market cap. So that's a fairly good deal. So one of the reasons I really like the tobacco companies is because they all kind of play in this genre right now where, the PEs are within fair reason, in my opinion, but their assets versus their market cap is very healthy. I like seeing when a company can liquidate everything and almost be worth what their market cap is. Imperial Brands was interesting because when I first noticed it, I looked at the revenue, and their market cap is trading lower than their overall revenues are, which I also found very interesting. But again, this depends on whether this is in USDs. See, it's a little confusing, guys, when you're talking between USDs and GDPs or GBPs, the British pounds. Sorry, not GDP, growth domestic product sales. But when we're just looking at their overall balance sheet here, guys, let's just quickly scroll through this. When we look at cash and short-term investments, you can see that they've been trying to desperately get into the vapor market, and they've been spending some money lately. Some money's lately on the obvious vapor market investments, but this company's balance sheet is fairly healthy overall. We can see just going through just the general stuff, total common equity we can see here has increased slightly. There hasn't been a whole lot going on with this company, similar to the other tobacco companies when we look at their overall cash flows, even though they have been increasing, which a lot of people say they've been dying. Well, they've been stagnant, especially there's been a few tobacco companies that have been able to increase the revenues, because we can see total cash from operations has been very flat for this company since 2016. So we've had 2 years of basically non-growth. But that's not a big deal to an extent. And what I mean by that is for a company like this, when we have slowing tobacco sales, it's expected to see this revenue drop. But when we look at the scale of this revenue in total cash, it's pretty impressive overall. Just to see something like this. So it's just impressive to see the stability. And when you're getting an 8% dividend yield already, like, you don't really care about net equity growth or in the stock itself. You really only care about them sustaining and perhaps growing this dividend yield. And honestly, when it comes down to the tobacco companies, guys, you want to buy the best of the best. And honestly, those, in my opinion, are the smaller cap guys like Altria Group and British American Tobacco, just because the dividend yields are high. They're already well ahead of their game when it comes to trying to bring back growth, to bring their stock value back up. Their PEs are much lower and I can't tell you guys to buy stocks. I'm not a financial advisor, but the ones that I personally own right now are British American Tobacco and MO, and I've got about $6,000 to $7,000 divided up between both of these, equaling about 15 grand just between these two companies alone. A little less than that, somewhere between 10 and 15 grand. But they're just, I can't get over these companies. I love them a lot. They're some of my favorite companies of all time, which is why I've been buying them recently. And again, if we just go back into their books, guys, looking at the cash flow, we can go over the key statistics really quick. Because this company is in the British UK, I can't see their book value on here. Unfortunately, I get a lot less information, which sucks. But we can see that they've got 30,000 employees. It's, again, a conglomerate company, guys. When you look at their balance sheet, it's nothing to gawk at. It is quite impressive. Let's take a quick look at their income statement here, because we can see total revenues have been increasing. And the reason that their total revenues have been increasing, like I said, you have to look at their bottom line and how they've been changing their profit margins. Just because their product sales are slowing, they could be doing what Apple's doing and finding a way to make higher margins somehow by even slightly raising the price of the current products. So even though the product sales are dropping, they're finding ways to raise the bottom line in revenues, which you can usually see in this part of their books, which we can see. So I mean, it's a good sign overall. I do think the company's stable. I don't think it's going anywhere anytime soon. Would I personally be buying it at this dividend yield? Just because they're a little late to the game, and their PE is still quite high compared to. I would just be patient, keep watching. I mean, it might not hurt to pick up a couple shares if you're interested in buying it. It's not on my buy list personally. I don't plan on buying it anytime soon. Just looking at it, I don't. If I were to put it at a scale, let's put it at my own personal scale. I've never done this before, but if I was going to give this a scale on a 1 to 10, guys, I would set this around a 3 or a 4. Just because in short term, I don't see this growing. They're going to have a lot of problems in the short term trying to catch up to the other companies. I don't think they're going anywhere anytime soon, so they do have a good time horizon to catch back up and find another golden goose product in the vapor market, or even maybe in the marijuana market if they dare step into it. But for now, guys, I'm staying clear of this guy. Now, in the British world, it's backwards compared to the American world, because the American world, the larger cap is a slower growth stock, where here it's the smaller cap that's having the bigger problem with the higher PE, whereas British American Tobacco, I do believe, has a way higher market cap overall, which we can clearly see. But for some reason, British American Tobacco with a higher market cap has a lower PE. And I always used to think that it was the larger cap companies that would have a higher PE, just because people would find more solace in them, and they're usually the companies that come up on radar and most of the analytics, or if you're using any kind of stock screener, it'd be the first thing that comes up is the larger cap companies. But I don't know what it is with British American Tobacco. It seems to it rubs me the right way in comparison to Imperial brands all around. And you look at the brands, guys, I don't know how this company does, and I haven't looked enough into where these products sell, which is something you're going to want to do when you're going over this here. You really want to see what products sell and where they're selling best and the sustainability of it. I don't know why this company has been lagging so far behind, and this lady that's running it seems really, really nervous in this interview. Again, it might just be her forthgoing attitude. What a way to make a living selling a product that can cause cancer. Say what you will. I think it's nobody's business what people put in their body about, especially when it comes to these tobacco brands, guys. I always get really annoyed by people that have moral issues with this stuff. I don't want to. There's nothing healthy about smoking. I used to be a smoker myself. And I just get how the addiction works. But because tobacco has been a part of society since the beginning of basically history, including gold. Gold has also been one of those things that's been in our history for a long time. But tobacco has been there just as long, and I consider it just as much a currency as any other thing like guns. It's just like it falls under that spectrum of, I don't know what to put it in, but when you look at, like, say, guns, tobacco, drugs in general, alcohol, it all falls under this sustainability that's been with our society forever, that I can't get over it, and I have to be a part of it. And I actually own Constellation Group as well, or Constellation Brands, which owns Canopy Growth Corp. It's a big, if you don't know Constellation Brands, another really interesting company. But these companies, I think their dividends are more than sustainable. I would focus on buying the smaller cap Altria Group and the bigger cap British American Tobacco that has to do in Europe. And you guys can let me know in the comment section below if you own any of these anyways. In the long term, I still think all of these companies will probably be around, but as my personal favorites, I would go with those two. And again, I hope you guys enjoyed this really quick breakdown. And this has been my 20 minutes with you, or just under 20 minutes. Now I have to do a 2-hour drive to go perform, because if you guys know me, if you have been new to this channel, I'm actually a full-time magician, and I actually show you what it takes to put on a show, which is part of a playlist on this channel you can check out as well. But yeah, so interesting company overall. Compared to the other tobacco stocks, not the biggest fan of it, but it's been a fun breakdown. So stay cool, stay awesome, guys, and I look super forward to chatting to you tomorrow.